Surviving 4 mining downturns. I guess I ascribe most of my success to the first mining downturn. In that circumstance, as a very young man, I made a lot of money. And I confused a bull market, an up market, with brains. In other words, I thought I was responsible for the money that I made. The downturn taught me just how smart I wasn't. But I was smart enough to learn the lessons of that failure. The fact that the industry is extremely cyclical. People who forget that ultimately don't succeed in this business. Mining is rebounding, but rebounding more slowly, I think, than many people would suspect. The good news about the mining business is that the mining business is beginning to be operated more as a business. The share certificates are viewed as fractional ownership in businesses rather than warrants on the underlying commodity, which is a different way of saying that the business is becoming much more efficient. As this show demonstrates too, mining is becoming much more cross-cultural. You see Iranian people doing business with Korean investors, interacting in Hong Kong with people from Great Britain. All of that is very, very, very good. The future of mining is, I think, extraordinarily bright, provided that investors remember that bull markets ultimately are the authors of bear markets, and bear markets ultimately are the authors of bull markets. Study. Invest in yourself before you invest in companies. Understand that in the terms of a commodity cycle, the commodity that looks the worst is the best. I know it's odd, but if you have a commodity that's selling globally below the cost of production, that is, if you have an industry in liquidation, you have a commodity where the price must go up, or else society won't have any more of the commodity. It's difficult to buy a sector where the outlook is bleak, but that's precisely what you have to do. It's tempting to buy a commodity that's performed well because the price action justifies the thesis, but that's a commodity that must and will fall in price. Which commodities are in my radar? Now, philosophically, I have to admit, because I'm of an older generation than you, that I'm a gold bug. So I like the precious metals business. But sticking to my own discipline, the most hated commodities that we see, and hence the most attractive, are uranium, water, potash, phosphate, metallurgical coal, although it's up off the bottom, and certainly some natural gas deposits in places of the world where there are temporary oversupplies. The stuff that everybody else hates is what you learn to love if you're in the business as many years as I. Do I think cryptocurrencies are killing mining investments? Not at all. I think the inefficiency that the mining business has exhibited over the last 40 years has diminished its appeal to investors. I think the cryptocurrencies represent interesting technology, and I would suspect that the strangest speculators in the mining business, those that the mining business loves because they represent dumb money, have been drawn into the cryptos. The idea that Bitcoin, as an example, was somehow more attractive at $20,000 than it was at $400 tells me that there was a disconnect between utility, which would have been greater when it was cheaper, and the narrative. So the people for whom $20,000 is cheaper than $400 probably have moved away from penny stocks into cryptos, and all I can say to them is good luck and good riddance. There is always one or two smart young people who I didn't know existed that I have the opportunity to get to meet. And occasionally, if I'm very, very lucky, I get in some way, shape, or form to invest in their future.